What's up, everybody? Inflation's still running hot, and banks paying you next to nothing every dollar you keep in the bank is slowly making you poorer each and every day. If you have $1,000 in the bank for 1 year, and let's assume that your bank is paying you a 1% annual interest rate, which I know a lot of banks aren't even paying 1% a year in interest, but assuming your bank can pay you a 1% interest a year, and inflation is, say, 8% a year, that means over the course of the year, your $1,000 is gonna grow by 1%. However, you're effectively going to lose $70 well worth of buying power over the course of 1 year by saving your money in the bank. So this is a $70 loss. But now if you have $100,000 and you put this cash in the bank over the course of the year, and you get the same thing, 1% interest versus inflation at 8% now, you're losing $7,000 worth of purchasing power just by preserving your money in the safe investment called the bank. And if you have $1 million worth of cash and you save all $1 million in the bank, where you're getting paid 1% of interest a year at the same time as is 8% a year, that means you are correctly losing $70,000 worth of buying power in the safe funding referred to as the financial institution. Now at this point, they're probably getting prepared to type me up something like, Josprit, what do you want me to do if I take this cash and I put it under my mattress? Well, then I'm not even gonna get this 1%, and then I'm losing all 8% worth of value. So what am I supposed to do with this cash? Am I supposed to go out and just spend it? Because now, if you go and spend this cash, at least you're not losing value to inflation. However, that does not resolve the problem either, because if you take this cash and instead of retaining it in the bank, where you grow by 1%, and you went out and let's consider you bought a car, and you bought this vehicle because now you want to transform this cash into something else. Well, now this car is also losing value. In reality, it's losing value faster than your cash. Now, of course, right now, we're in a weird environment where sometimes cars are certainly going up in value, but this is not the rule. This is just the exception to what's going on in the automobile market. But commonly, if you're going to buy a new vehicle, that car is going to lose 20% of its value immediately as soon as you drive it off the lot. So if you're dropping 20 worth of value by buying a vehicle, you're better off by keeping your cash in the bank than by buying a vehicle, because buying a vehicle loses value faster than by keeping your cash in the bank. So what's left but what if instead of keeping more money below a mattress, and instead of keeping it extra money in the bank, and instead of taking the extra money and it's going on buying cars, you took this cash and you sold assets like stocks or real estate or agencies? Then what? Well, you might be worried about the risk of losing price there, because we've seen what's been going on with stocks and crypto, and asset prices crash. You have the risk of the value of investment dropping. However, you can also see the VFI of your investment rise. This is where now you have to understand, how do you save your money strategically? And when you're not saving your money strategically, where do you put your extra cash? This is where you first have to understand, how do you save your money the right way? Because growing up, I grew up in a traditional house where my parents always told me that you need to make a massive earnings by getting a good job, and then when you make amazing revenue, you can save as much money as possible, because saving is the way that you become wealthy. And sadly, that advice is very far from the truth. In fact, your savings should be there just to protect you from A financial emergency, but your savings, will never be able to make you wealthy. So if you want to save your money the right way, there are 3 reasons why you should be saving your money, and these are the only 3 reasons why I think you need to be saving your money. You should save your money. Number 1. For an emergency. This means you want to have somewhere between 3 to 12 months worth of savings both aside to protect you against a financial emergency, and this is going to depend on your risk tolerance if you don't mind taking on extra risk. If you don't have a whole bunch of financial duties you don't got a family to take care of, well, then maybe you only need a few months worth of expenses put aside for your savings. If you have more expenses, you cannot take on the higher risk. You do not need to take on the higher risk. Then perhaps you take 6 months or 9 months or a year's worth of savings and you put that aside to protect you against the financial emergency. Number 2, you want to save money for a massive purchase. You want to buy a vehicle, you want to buy a house, you want to buy something nice. It's going to take you cash to do that. And you want to have cash but aside for that. And third, you want to save money for an investment. If you want to buy a apartment property, you want to go out and spend money. A business, you want to go out and make an investment, buy and need cash to do that, and you want to put aside cash for that. In case if you're not saving your money for one of these 3 reasons and you're just saving your money to save, your savings are literally making you poorer each day. This is where now you have to understand where and how to park your money, because if you were just going to save your money, say for an emergency to see, you want to put your cash somewhere liquid that is easily accessible. This can be something like a bank. Now the reason where you have to be know how of where a bank plays a purpose is because so many people think that when you just keep your cash in the bank, it is the safe place to keep your money. It's a secure place to store your money. It's the secure place to keep your money, because at least when you put 100 bucks in the bank, it will be 100 bucks in a week or 2 weeks or a year. But the reality is the $100, while it's still $100 digitally, on paper the $100 cannot buy you the same thing today as they could a year ago, as it could 10 years ago, as it should 20 years ago, because of inflation. And so if your bank's savings rate, your interest rate, is not keeping up with inflation, which, news flash, it will not ever keep up with inflation. If your bank savings rate is not keeping up with inflation, you don't want to keep all of your extra cash in the bank. This is where you want to put your cash to work outside of just the bank. Sure, it's great to keep your cash in the bank because your cash is easily accessible. You have the FDIC insurance, you have the cash that you can easily go and get. However, you need to know where you can put your cash, because you don't want to keep all of your cash in the bank. Use the bank to your advantage. Don't let the bank take advantage of you, because the way the banking system works is the banking system profits when you preserve all of your cash in the bank, because as soon as you take the $100 and you deposit in the bank, your bank is going to take that cash, turn around and get rid of it as fast as possible. The $100 for you think is an asset, because you worked hard to earn this $100, and now you're going to put this cash in the bank, so you think it's an asset. However, that same $100 for the bank is truly a liability, because for the bank that cash is losing fee to inflation, and they need to grow this cash because they want to earn interest on this cash. So they're going to take the $100 that you deposit, and they're without delay going to turn around and try to get rid of it as fast as possible the way that they do. That is by lending the money out because this lending is an investment for the bank that's their asset, so they turn that liability, which is your deposits, into an asset by turning around and getting rid of that money by investing the money by getting it out of the bank's hands because they want you to save your cash in the bank that way. They can make money off of your savings. Now this is how the banking system works. This is why you want to apprehend the system, that way you could use it to advantage. That way you can use the bank to advantage. Instead of just letting the bank take advantage of you, so what does that mean now? Use a bank the right way. Use a bank to preserve your emergency cash. Because it's liquid, you know where to access it, and it's safer over there. Keep your cash in the bank when you want to purchase something. Keep your cash in the bank when you want to have cash to make investments, or you can automatically invest your money, or you can take this investment cash, use it to pay down some of your debt. You can also use a credit union. That can also be another great device for you. However, don't just maintain all of your extra cash in the bank. Now this is where you want to be investing your cash if you don't have an investment right now. If you're just waiting for the right opportunity, sure, keep your cash in the bank as it's parked there as a temporary place to keep that money earlier than you go out and actually investments your money. But that should not be the final destination. It's kind of like a bridge where to just keep that cash quickly, because it's an easy storage now. As quickly as you start doing this, your banker is going to call you up and say, hey, you had a big bank account, but now your cash is leaving. Why are you taking your cash out of the bank? Don't you need to keep it safe with us? And this is where you're going to have to remember the reason why you want to take your extra cash out of the bank and put it to work in assets. Whether it's stocks, whether it's real estate, whether it's businesses, maybe it's cryptocurrency. Maybe it's another asset, maybe it's physical gold. You're looking for these alternative investments. That was not just your bank. That way it's not just your savings account, because when you save your cash in the bank, inflation is going to head faster than your savings rate, which means that your cash is losing price to inflation. Nobody has grown to be wealthy by saving their money. They have become wealthy by taking their savings and putting it to work, meaning taking it out of the bank and putting in places where your money will develop, because your money will never outgrow inflation in the bank. So this is where you have to be clever, understand where the bank's purpose is, and placed your cash to work.